I tell you, the volatility, and really the volatility was up until the attack started last Saturday, and then it's been basically straight prices for Brent and WTI straight up since then, except a little bit of a lull Wednesday. So really, I think a lot of it is as expected as the Strait of Hormuz basically closed down and the inventories built up, that you would just constantly see an increase in price, and that's what we are seeing really from here on out. It's going to be the Strait of Hormuz situation, how much oil is flowing through there, and any production facilities or energy facility damage. At least on that side, it's been limited, but on the Strait of Hormuz, it's been essentially shut down. You know, we were looking for around high 70s price for March and April for Brent, and as of last I guess Wednesday, and obviously that thinking has changed a bit because of the price action we've seen yesterday and today. I mean, WTI alone is up nearly 10% today. That's a big move for one day. Um, you know, really, there's no near-term top on it. Essentially, it's the inventories filling up around the Middle East. There's limited options to move more oil out. Saudi Arabia's been trying to move more oil through their pipelines to the north, to the Red Sea, but 20 million barrels a day passing through the strait, basically going close to zero. Near term, it's you know, building up. Kuwait is discussing shutting in production, and you have to think that's going to basically move from country to country over the next week or so, and then prices could tick up even substantially higher than where we are now, as if that comes into play. Less financial involvement and more maybe military involvement as far as helping to secure the strait and allow tankers to move through with escorts. I think that would probably be more helpful, and certainly from a psychological standpoint, I think it would have an impact on prices. What I was hoping to have happen over the course of this week is maybe the hope for discussions and a de-escalation between the parties, and then in that case, once we get past the opening up the Strait of Hormuz to some extent, that prices would start to level off and then potentially start to decline some, because we came into this year expecting a fairly large surplus globally on the oil side of maybe as much as 3 million barrels a day. So here we are now talking about inventory shortages, or not inventory shortages, but supply shortages, because inventory is actually quite large around the world as well. 4-year high, several billion barrels of oil in inventory around the world. So it's, you know, about a 70-day supply. But at this point, you know, you really can't get the oil to where it needs to go because it can't pass through the Strait of Hormuz. So the prices could just keep going up higher and higher as more and more news comes out about shutting in production. I think that the U.S. Or North American producers will benefit. Obviously, they'll be receiving a higher price for their oil. They'll start looking to start hedging some of that oil to lock in the prices. And, from their standpoint, the way it typically works is you get the higher price, you pay a higher royalty, the taxes and the severance taxes come into play, and then the rest of it generally falls to the bottom line. So it's a fairly high margin, and they have plenty of permits in hand. They have thousands and thousands of locations to drill. So I think you'll start to see producers in the U.S. start to tick up the rig count little by little and try to bring more production on to benefit from the higher prices. Yeah, Russia, they're selling more oil to India at this point. So I think they'll benefit as well, just because it's going to be looked at as kind of a last resort option. So I think their production will be heading up a little bit higher as well. As we near the midterm elections in November of this year, I think that both electric prices have been an issue in the US, and certainly now gasoline prices will likely make their way into the conversation, because I think the RBOB was up 70 cents or so just over the past several weeks, and it's going to go up even higher with this additional tick up in prices yesterday and today. I think at the end of the day, what's going to drive pricing in the midterm is just activity that flows through the Strait of Hormuz and just the sentiment and outlook there. And then secondly, is there going to be any widespread damage to the energy facilities throughout the Middle East? Thus far, that's been limited. We hope that remains to be the case, because to repair damage is going to take a lot longer potentially than to open up the Strait of Hormuz.